In this video, I'm going to break down the essential strategies you need to start trading options. Whether you're looking to multiply your profits or protect your investments, options trading could be the game changer you've been waiting for. By the end of this video, you'll know how to get started and you'll see why options can be the rocket fuel your portfolio needs to take off. Let's dive right in. All right, first up, what exactly are options? Think of options like a backstage pass to the stock market. You've got the right, but not the obligation, to buy or sell a stock at a specific price before a certain date. You can trade options using the same platforms you use to buy stocks, but with options, you can get more flexibility and leverage. There are two main types of options. There's a calls and then there's a puts. We'll break those down next. Let's talk about call options. Think of a call option as booking a vacation in advance at today's prices, even if the resort gets way more expensive by the time you're ready to go. That's exactly how a call option works. Okay? You lock in a price to buy a stock. If the stock goes up, you can make a significant profit by exercising your option or selling it for more than what you paid. Here's a real-life example from a trade I made on Tesla. Back in March, Tesla was trading around $165, and I bought the $400 strike call options, which meant I was betting Tesla would rise before June 18th, 2026. I got in at $12.51 per contract, or $1,251 per contract, since options control 100 shares. Fast forward just 4 months and Tesla surged, allowing me to sell those contracts for $50.75 each. $5,075 per contract, right? Because it's 100 shares. That's a $15,000 profit on a $5,000 investment. This is the kind of power options give you without ever owning the stock itself. Here's where it gets interesting. When you trade options, you're working with a multiplier. Each options contract controls 100 shares of stock. So when you see a call option priced at $12.51, it actually costs $1,251. Think of it like buying a bulk package. You're controlling a lot more shares with a single contract, giving you that extra leverage. In the Tesla trade, as the stock moved higher, my call options value skyrocketed. I didn't have to wait until 2026 to cash out. I was able to sell my options in July for $50.75 per contract, turning that initial $5,000 investment into $20,000 in just 4 months. This is why options trading is so powerful. You can get in, make your profit, and get out when the timing's right. If you're enjoying this and want to see the exact trades I'm making in real time along with my market insights, make sure you check out my online community. I share all of my trades, break down the market trends I'm watching, and offer strategies for consistent monthly income. The link's in the description below. Come join us. Now, let's flip things around and talk about put options. If call options are like stepping on the gas, then put options are your brakes. A put option gives you the right to sell a stock at a specific price, which is handy when you think the stock is about to take a nosedive. For example, in July 2024, Tesla was trading at around $265. But if you had the hunch the stock was going to drop, you could have bought a $260 strike put option. By August 5th, Tesla stock had dropped all the way to $186. That put option would have surged in value because you could sell shares at $260 when the market was only offering $186. That's a $74 per share profit. Multiply that by 100 shares and you've got $7,400 profit from just one put contract. That's the power of puts, profiting when others are panicking. Now let's talk about what drives these wild price swings in options. It's not just the stock price that matters. Volatility. Think of this as how wild the ride is. The more a stock price is expected to jump up and down, the more expensive the options become. Then there's also time until expiration. The longer the time, the more chances for this big stock moves. It's like getting an insurance policy. The longer the coverage period, the more you pay because there's greater chance of something happening, right? So take Tesla again. Its crazy price swings make its options a lot more expensive than something that's more stable, like a gold ETF. Trading volatile stocks is like riding a roller coaster versus a merry-go-round. The risk is higher, but so is the reward. The amount of time left on an option works just like an insurance policy. If you buy a one-day insurance policy, it's cheap because there's not much time for anything bad to happen. But if you buy a 30-day policy, it's going to cost you a lot more because there's a higher chance something could go wrong over that longer period. The same goes for options. More times means more opportunity for the stock price to change, and that makes the option more expensive. For instance, Tesla options with only 4 days left until expiration will be much cheaper than those that are 60 days that have 60 days left. The more time, the more chances for the stock price to move in your favor. So, how do you actually make money with options? Well, there are two key ways. The stock price moves towards or beyond your strike price, higher for calls, lower for puts. Volatility increases. That makes those options more valuable. It's like betting on a horse that suddenly runs faster than expected. But then, here's the catch. Options can be risky, and if you're not careful, you could lose your entire investment. That's why it's crucial to have a solid strategy and know when to lock in profits. Now, let me be real with you. Options trading can feel like playing with fire. Sure, the potential profits are huge, but you could also lose everything if the stock moves against you or time runs out. Okay? I've seen it happen many times, okay? But for example, an Nvidia trader who bought call options at the wrong time could have watched their value of their options drop to zero, just like that. It's a high risk, high reward game. So make sure you've got your safety net in place. There are ways to make consistent monthly incomes from options trading using low risk strategies, and that's what I specialize in. Check out my next video where I share how I make money on every trade, even when I'm wrong. I'll see you on the next one.